Hello everyone, welcome back to Lab for Crypto. Today we are going to have a discussion about the recent price action of Bitcoin after the hotter than expected CPI report and what that means to Bitcoin. Try to answer why gold is in a new all-time high now and how gold is correlated with Bitcoin. Moreover, we are going to check what are the probabilities for the next rate cut, which is a very important moment for the markets and especially risky assets, as that will inject liquidity into the market as the borrowing cost will be reduced, and we will touch that in a bit. And also have a look on our unique risk algorithm and check what is the current risk of Bitcoin and what one can do when Bitcoin is in these prices just before the halving. Before I dive into all these graphs, I wanted to let you know that we are going to be speakers in one of the biggest blockchain events in Dubai. We are going to speak in the Global Blockchain Show on the 16th and 17th of April. So if you are there, just come and meet us. And also you'll have the opportunity to see one, not one, basically many um, speakers that they are in the forefront of the blockchain ecosystem. And you can see the list in the speaker section. And as a thank you to our followers, we are going to give away 5 business tickets to the event. So leave a comment below the video and you will be able to win one of the tickets to the show. And see you in Dubai. Let's dive in. So yesterday we had the announcement of the CPI report. The CPI report in short is the inflation in United States. And as United States is the biggest economy, that's why it's affecting the markets so much. And we can see that from the 3.2 that it was in February, now it's at 3.5. What that means is actually Fed, they don't need and they don't have to basically reduce the rates, as actually their aim is to bring inflation to the target of 2%. And their way to doing that is by leaving interest rates at high levels. That's why if we go and check the interest rate of United States, they currently at 5.5. And when that happens and they are starting to reduce the interest rates, they need to be sure that actually inflation is tamed. And now they are going to loosen their monetary policy and inject capital into the markets. That is a very favorable moment, especially to risky assets. And that is why you see everyone monitoring these values. If we go and have a look to, let's have a look to the CME, the FedWatch tool, you will see that the market are expecting the next rate cut to be in September 2024, but a couple of days ago was actually in June. That means the market thinks that the Fed are going to keep the rates higher than expected to tame inflation. And always the markets are watching a bit forward. And what that means, that is why you see gold reaching new all-time highs, because when you have the Fed holding the rates so high, means there is a probability that the economy will break. And what that means? That means households and everyday people, they are going to feel the effect of high inflation more and more every day. And that can bring also companies to bankruptcies because the borrowing cost stayed high for so long. And as a result, usually people to protect their money when you have an economy that there is a chance to break, to starting to allocate their capital to gold and generally commodities. And what is important for me now is that actually Bitcoin this time started to show very strong capabilities of being a hedge against inflation. We saw a dip when the announcement of the CPI report was out, and then it recovered fast. And now it's hovering close to the all-time high. And let's hope it's going to continue like that, because it's going to be a really important moment for Bitcoin to be named as a good inflation against a good asset against inflation, and an asset which it's more towards safety, which gold is basically for many, many years. And let's hope that that will happen. If we move now to the DXY, you'll tell me, okay, but dollar strength is increasing. And the factor for that is, as I said before, US is the biggest economy. And you will see that also EU is holding the interest rates steady, so they are not starting to rate cut, and other major economies as well. And you have, because the inflation problem is a global basically problem, that means your bet, if you're going to stay in any currency and not a commodity, is still dollar. But in my opinion, as I think I published that many, many months ago, that was in January 2024, but even you can find a post by me, uh, I think even a couple of months before that, when I projected the US public debt, I showed that basically it's increasing exponentially. And what that means, in short, is that it's unsustainable. And for me, Bitcoin seems to be the safest asset for someone to keep his capital there. Of course, it's not a financial advice. This is my personal opinion. But if you try to do the math, you'll see that it's doing an amazing job in also increasing in value, not only protecting you, but also increase. Gold performance, although now is reaching new all-time highs, it's not for me an asset that it can um, even for a discussion, a fun discussion, to even conceive that it can outperform Bitcoin. That I think also I have a plot in our Twitter which you can check how the two assets are. You can compare if you allocate center amount per month and do DCA basically on Bitcoin and in gold, you'll see that Bitcoin is outperforming gold by far. And the correlation between Bitcoin and gold is basically really high at 0.83. So it's really strong correlation. And you will see that Bitcoin is starting to dethrone, in my opinion, gold. And the markets are starting to notice that, especially after the, um, the spot ETFs, where we saw that the spot ETFs was one of the most successful in many years, the launch of the spot ETFs in US. And you see many investors starting to allocate money to Bitcoin as a safe asset. After especially Riley Fink said that Bitcoin, it's an asset that it's a flight to safety. It boosts the confidence of many investors, and they started to move money and capital from their portfolio to Bitcoin. And that is obvious, as I said, from this graph that you'll see for the last 3 months, the correlation of Bitcoin and gold is strong positive, which what that means, if gold goes up, Bitcoin goes up. And if gold goes down, uh, Bitcoin goes down as well. And the fact that Bitcoin, because it's so versatile, is also a commodity, but also is a technology, I think in the long run, it will outperform gold by far. But as I said, this is my opinion and not financial advice. Let's dive into some other graphs and see in which state Bitcoin is now and also the crypto market before halving. If we have a look on the free float market value to realized value, we will see that now it's starting to cool off. Usually when it passed the threshold of 2, it means that it's a good time to start exiting the market. And after the all-time high of Bitcoin in March 11th, we will see that now it's starting to cool off. And you will see many on-chain data starting to cool off. It doesn't mean that we are out of the waters yet. But of course, it's a good thing to starting to see the market starting to stabilize. If we also check the net unrealized profit and loss, you will see that again after March 11 to 13th also is starting to cool off. And if you want to know more details about all these models, you will find it also in our free YouTube channel. The videos are there, but also they are below the graph. And if we move to the Coinbase Destroyed, which basically this model, it's the movement of Bitcoin through time, and it gives more value to coins that are held for a longer period of time and then moved. And what we can see is that after the 25th of March, we are starting to see a plateau. And that means alter coins are starting to stabilize, and the redistribution of alter coins starting to sell some of their assets, and more specifically BTC, to newcomers is starting to level off. And you will see this line increasing for 3 to 4 months, and now we are starting to see this stabilization. That is important, as in general, when you have people that join Bitcoin long time ago and they want to take some of their profits, this eventually, this selling pressure eventually is going to level off. And when we are keep seeing this demand from spot ETFs and people after halving, and as we enter rate cuts, which for me it's the most crucial thing, when you see people starting to have more available capital after the rate cuts, they are most likely trying to invest in some assets. And risky assets tend to do better in scenarios when we have a quantitative easing. And there is the point where we're going to see Bitcoin and altcoins thrive. But for now, if we check the altcoin index, you will see that Bitcoin is outperforming altcoins by far. The current value is at 41. And when we are start seeing altcoins show some strength against Bitcoin, it's going to be the time that you can move capital from BTC to altcoins if you want to follow some of your favorite altcoins. Of course, in our platform, you will be able to check the risk of many altcoins and be able to identify which assets have a low risk and therefore higher chance of earning more excess in your allocation. Currently, in our algorithm as well, after Bitcoin all-time high in March 13th, we'll see that the market is starting to stabilize as well. Bitcoin risk is at 51%, which is not low, but not in the levels that it was in March, where it was almost 82%, and then dropped to values of 64 and 61. And there was a point which some people, when their risk tolerance is between 50 and 60, they even were able to uh, allocate some of their USDT to Bitcoin and accumulate more. And this is a model, and also all the models that we have here are going to help you make these informed decisions and be able to, based on your risk tolerance, do the right decisions and have a better perspective on the market. For me, an important level is the key moving average, which I watch every day, the 8-week more specifically. And in my opinion, there is a low chance that Bitcoin will drop below 64.5K. And always I'm using this line to have some of my trades there because Bitcoin is in a level which is within my risk tolerance. And therefore, I'm just following this line and I'm just setting some orders through the 8-week SMA. And I'm hoping that Bitcoin maybe drop a little bit to accumulate more. But as I said again, and I will say that one more time that it's not a financial advice and this is my personal opinion. I hope you like the video. Leave us a comment. I hope I will see you in Dubai. And until next time, bye bye.